Good morning, everyone. I think we have a very exciting first panel discussion of this year's IFX Expo here in Asia. I'm actually joined today by Neil Tan, who's Chairman and Managing Partner at AIHK Tsunami Advisors, Mario Singh, Founder and Chairman at Fullerton Markets, Siju Daniel, who's Chief Commercial Officer at ATFX, and Hayden Briscoe, who is Global Ambassador at Atlantic Partners Asia. Gentlemen, welcome. Thanks for joining me today. So today's discussion is obviously, we're going to zoom out in a sense and talk about really the APAC region in general. And Neil, I wanted to start with you. You've watched APAC's regulatory and macro shifts for years. I wanted to ask you which policy or capital market developments are now most decisive in shaping cross-border investment and financial innovation across this region?
Yeah, so thank you so much, Nikolai, and also the team over here at IFX for having me. A little bit of background on myself, founder and chair for AIHK, or the Artificial Intelligence Association of Hong Kong. Aside from that, I have my own advisory and consulting firm. Essentially, what we're doing is looking at the global macro environment, we're adapting inside of the situation. So I think a lot of people are obviously experiencing what is actually coming across the Pacific from the U.S. So a lot of U.S. policy has obviously impacted both Hong Kong and the rest of Asia in the sense of the trade wars, the tariffs, and those different things. I think sitting here inside of Hong Kong, I think you've seen that type of trade dynamic change pretty significantly. You've seen U.S. trade, China-U.S. trade drop by somewhere around 20 to 30%, whereas China trade with other nations went to 10 to 20%. So there's a bit of a diversification in terms of the portfolio from that perspective, as well as a lot of the other existing countries, whether they're chief beneficiaries in Southeast Asia, people in Africa that have this type of beneficial or more beneficial trade representation inside of the U.S. trade. I think the second piece is inside of inter-Asia trade has obviously also picked up as well, in the sense that the different countries within Southeast Asia trading with each other as well as with China, that's also picked up quite a bit, whereas in other places it's also dampened. Probably a couple of other areas that to cite, and I'm sure the rest of the panel actually has a few areas that they'd like to highlight as well, is number one in terms of digital assets. Mm-hmm. So digital assets is a key topic. Again, much of this is being driven by the change of position in the U.S. So U.S. actually doing a 180 in the sense of SEC clamping down on Web3 or digital assets and so forth, making that 180 and just going all in into crypto actually has basically put Bitcoin into all-time highs, right? So I think in Hong Kong's stance, being part of the Web3 task force, looking at the legislation, how we're being very much a global crypto hub, that's basically the game plan. What we've done is we've actually outlined the different licenses to get there, right? And number one is obviously virtual asset trading platform licenses. We're talking about custodial services. We've introduced stablecoin legislation. We're also have different use cases in terms of RWAs, or real world assets, so tokenization of green bonds, tokenization of gold deposits, all these different things. So pushing very much into this Web3 space. And last but not least is really inside of AI. So obviously AIHK is inside of this space. What we've built is a team that's cross-sector. And what we believe is inside of AI, being sector specific at this point is actually not going to encourage a lot of innovation. Why? Because the higher the regulatory barrier, the less innovation actually generally comes into the space. So you need to be learning from different places. And ultimately, I think there is no uniform legislation. I know Singapore has some AI safety guidelines and those different things. A lot of different opportunities for us to collaborate together inside of Asia in this space. Thanks.
Great. Awesome. Thanks, Neil. Hayden, my next question is actually for you. From your vantage point in multi-asset management and capital markets, how are investors reallocating capital within APAC this year? And are we seeing a pivot towards domestic growth, yield opportunities, or diversification away from the West, a bit like Neil was saying?
Yeah, well, definitely Asia is back, and in particular China is back. You can see now, many years people are saying it's uninvestable. Well, everybody's investing back now, and you see the performance in the stock market, particularly in Hong Kong, up around 30-odd%. That's pretty impressive. And you've got markets also within the region like South Korea, which are phenomenally up around 64, 65%. So definitely the region is back. I think the other thing to pick up, also the regulatory environment is changing and people are focusing more domestically. A lot of thematics are going on. So whereas you know that China is the world leader in drones, well, there are other countries now where drone makers are popping up and having some high price performance. So people are going back to domestic or national winners they expect, particularly in the resource sector. This is going to be an ongoing theme, and clients are allocating a lot more money to those thematic ideas within portfolios. In terms of your question around yield, it's okay. We've got okay yields, but we've got central banks now cutting rates around the world. I suspect yield opportunities are going to come up, but that comes with a bit of a barb because inflation is likely to go up as you go back to your domestic market, higher costs, higher inflation. So you're going to be chasing real yields, looking for those, let's say, digital assets, like BTC, digital gold, if you want to call it, those that have real yield characteristics in clients' portfolios. So we're seeing clients talking about that at an institutional level and just starting to allocate it. So the wave, I think, hasn't even really started just yet. Diversification, I think, is coming through the thematics. Before it used to be just pick bonds or equities. I think people have woken up to now that old 30-year trade has played itself out, and they're looking for different ways to allocate capital today.
And what kind of ways are they looking to reallocate it?
Well, I just got off a podcast this morning with someone I've listened to for about 35 years, and they're telling to put 30% into gold and put another 10 to 15% into BTC. So I was a bit shocked at this very stoic old 35-year veteran in markets is thinking very differently. But again, it's coming back to the new wave. Inflation is also playing a big part in this. And obviously that is structural now too. This has got less cyclicality than we had in the past. So clients are going to want to move away into real producing assets.
Great, thank you. Siju, my next question is for you. The guys are talking macro. I want to kind of dig a little bit deeper and talk micro. If we're talking about regulation, capital flows, and technology, what are clients actually demanding, let's say in your experience at ATFX today? And are we seeing a structural shift in how specifically traders in the APAC region think about risk and opportunity in 2025? I mean, Hayden just mentioned BTC and gold, right? And we've been, I think, for all of 2025, all we've been hearing in the FX and CFD world is gold, right?
Yeah, I don't think that's much different, right? But in terms of going from macro to micro, when we talk about Asia Pacific in general, broadly speaking, right? And what has changed in terms of client demand, and what we've seen is the need for localization, right? So I often think about this where someone says an Asia Pacific strategy. Well, what does that mean? Within Asia Pacific, you have a lot of different countries, a lot of different languages, a lot of different cultures. So having been in the industry for 20 some odd years with previously a foreign broker, sitting on the other side of the world looking Asia Pacific, it all looks very homogenous, right? Uh-huh. So today, I think to be successful within Asia Pacific means you need to get very local. And what does that mean? Well, it doesn't mean just having a website in language, right, with an AI who can potentially, translate or something like that, because clients demand local expertise. So that means having local language websites, local payment channels, even communicating to them through local, for example, chat systems and things like that. So I think in order to succeed in what we've seen, and part of our strategy as to why we have 24 offices throughout the world, is because you need to get very, very local, right? And the other thing that we've seen is as the world gets more and more digital, there's still very much an online to offline component, right? So having those physical presences, having the ability to go and meet our clients, talk to them face to face, has been a big driving factor. In terms of the clients themselves, if we break between retail and institutional, again, if you talk to guys that have been in the business for a while, they'll talk about, they long for the days of, 5 pip spreads with commissions, right? So the demand for spreads to get tighter, the demand for execution to get faster, the demand for deposits to be instant, for withdrawals to be instant, right? That's pushed more innovation and demand on the market. And on the institutional side of the business, I would say, again, same thing, in that quasi sort of institutional segment, you're seeing that their needs, their demands have gotten a lot more sophisticated, right? So last week, for example, for the first time, I saw one of our clients actually sent us 3 pages worth of questions, right? Normally, it's a salesperson talks, you go through it, this is my spread, this is that. But we got literally a 3-page document with very specific, sophisticated questions, which, again, when you're operating in that quasi sort of institutional space, you normally don't see.
Great. Maria, I wanted to throw it over to you and kind of get your perspective on, from what you're seeing at Fullerton, in terms of what Siju said and in terms of clients within this region, or maybe even globally. What kind of shifts are you seeing? And what does sustainable success look like in 2025? And maybe which business models will endure beyond, let's say, short-term volatility? And the short-term volatility that we've been seeing this year, like Siju said, like Neil said, we've got crypto assets, we've got, let's say, risk-off assets like gold that are in very, very high demand.
Well, I like the word sustainability. That's actually one of our core values in the company, in terms of how do we make the company sustainable from a short-term, medium-term, long-term perspective. So the way I look at it, I call it the 3 steady states. In terms of however the volatility goes, the 3 steady states are always, number 1, is it a technology shift? Number 2, is it an economic shift? Number 3, is it a social/behavioral shift? Let me expand. So when I say a technology shift, as Neil already mentioned, you can't afford to ignore AI anymore, right? So is this a technology shift? The way we are growing as an industry, is there going to be a lot of technology that's going to be employed? AI, how does AI fit in? So of course, that is key. So if it's a technology shift, then the company is obviously going to be putting some resources on that. Number 2, is it an economic shift? What is happening in the economy right now? Are there a lot of tectonic shifts? If we were looking at, there's a report I'm sure everybody has looked at, right? Last month it was released, I believe, by the BIS.org, the Bank for International Settlements. And if you're looking, and this is a report that's done once, literally every 3 years. So the last time a report was done was in 2022, when it showed that global FX volumes literally came in at about, say, 7.5 trillion. This year, just last month, came in at 9.5, which is a huge increase of 28%. So is that a good shift? Oh, yes, for sure. So our industry, these are some of the bright spots, right? An economic shift, as I would term it. And then finally, when I look at it as a social/behavioral shift, how are people actually engaging with the market? And obviously with all this AI, people want more UI, UX, people want easier, faster, cheaper, better. So these are the 3 pillars that we as a company look at. Yeah, number 1, technology shifts. Number 2, economic shifts. Number 3, social kind of shifts. And everything can be literally siloed into any one of these 3 pillars. To answer the last part, Nick, in terms of the business models, I think this is where, of course, Siju hit the nail on the head. Customized local campaigns. All of us are trying to build a global business, but for this part of the world, for AsiaPac, we cannot afford to ignore the simple localization. And it really just goes beyond putting on a website, putting on a simple support system. You really got to get under the skin in terms of the local culture. Yeah, so I think the customized campaigns part. So as an example, when I say customized campaigns, I mean, that's the big meta narrative, right? Certain countries would prefer more volume driven. Okay, how do I earn more commissions if we drive more volume? Certain other countries would say, hey, we don't really understand much about education in this space. Whether is it about crypto assets, whether is it about gold, or whether is it about Forex. So customized campaigns, and I cannot stress that enough. So customized campaigns, especially for this part of the world, hugely important.
I think you make a really important point. If we talk about our industry specifically, and Siju, I hope you agree with me, over the last 20 years, like you guys said, we've been trying to grow global, and now it's kind of like, all right, well, we've saturated the whole world, right? We've got all these different regions, and now it's digging deeper and really kind of diving into each individual country, each individual people. I find it very interesting that, we travel around the world, we go to a lot of these different conferences, thanks to IFX. And again, in every region, it's a little bit different, right? It's still a people factor, right? People are ultimately the communication, the connection to everything, right? And without people, we wouldn't have markets, we wouldn't have anybody trading on the trading platforms and things like that.
I saw a post from someone on LinkedIn yesterday who I think visited Hong Kong for the first time, and he was surprised that there's no 4th floors in Hong Kong, right? And so I remember he posted it and he's like, oh, I had no idea. He's looking for it and it doesn't exist. And he asked someone local and they explained the rationale behind that, right? But if you didn't know that, and I use that example often, right? Like if you didn't know that that number had a certain significance in this part of the world, then again, when you do your marketing around it or when you do your account numbers around it, that has an impact.
Absolutely, and I think if people are not aware of these cultural differences in individual countries, I mean, that just kind of puts you down in a way, right? I mean, people look at you and are like, well, okay, these people don't really understand my market, my language, my community.
Bro, I want to share a personal frustration for me. I flew in last night in terms of local culture, right? So I didn't bring any cash. I didn't bring any fiat currency. And I had one sole aim flying in here to meet some of my friends here and go out for goose. We got no goose in Singapore. Right? So I went downstairs to the hotel. I wanted to go and find a goose place, and I literally just wanted to feast on it. I could not pay with a credit card. So many of these people, they just don't take credit card, man. So I obviously have to go and either exchange money or download this octopus card and all that, right? My mistake. So this just underscores the fact about understanding local culture.
Yeah, absolutely. And goose has got to be pretty good. I got to try that. Hayden, if we can switch back to you for a little bit and talk maybe a little bit more macro. The guys have obviously said we're experiencing shifts, and you have said we're experiencing shifts on the micro level, macro level, inflation, politics, geopolitical risks, etc. I wanted to ask from your perspective, how are Asia-Pacific companies accessing global capital today? Are there any changes? And are we entering a new era of, let's say, cross-border listings, partnerships, or secondary market, let's say, innovation that redefines really this region's footprint?
Well, I think it's pretty obvious that we can see the Hong Kong stock market in particular is going to probably close out the year as the number one IPO market in the world. So capital is well and truly back. Just like this conference today, there's many conferences going on where regional players are coming to Hong Kong or Singapore or Korea, particularly Hong Kong though, to raise capital. Money's back here. Obviously the global asset allocators have just dipped their toe in the water. So I expect to see 26, 27 and beyond continue on growing rapidly here. And again, we talk to headhunters around and they're struggling to find talent as well. Throw in another mix. We've got gold here, bounded gold, so it's becoming a big gold hub outside of Switzerland. But I want to try and link the global capital flows to what I believe is going to be one of the biggest structural changes we're undergoing. And it goes back to Siju's comments around localization. So on the 16th of October this month, there was a Georgetown memorandum of understanding that was signed, and that was between the ASEAN 5 players, Vietnam, Singapore, Indonesia, and I missed one, Thailand. They've signed a memorandum of understanding around their payment systems. So they're going to link their local payment systems to these other regional players. Now, this is really a huge change in payments where they're going against what SWIFT has been doing, trying to globalize everything, where after the Russia crisis, where people were blocked out of SWIFT, they're now saying, I can't handle that. I don't want that for my citizens. I want to have control of my payments. And this is what's going on within the region, and we're at the forefront of that. So you're talking about 500 billion people who are getting signed up to a brand new payment system who are going to be able to do cross-border QR codes at a retail level. Now, the institutional side of the businesses haven't even caught up yet. So imagine all the new rails that are coming through. We also at APA are finding that we have got conglomerates within the region who are sick and tired of banking with all these other countries and having their money locked up or having to use their capital. So they're trying to internalize their flow. So when I say think of that, think of big shipping companies. They're coming to us to just say, how can you internalize our flow, help us with the actual banking, not even the blockchain at this stage, the actual banking in each of those countries, and help us go cross-region. I'd say one other thing that we're going to see here is a leapfrogging. Back to this point around payments changing. Think about back to the telcos. Think about back to early 2000. There was this mad rush to get your phone online. So you put up all these towers everywhere. They were hugely expensive. Emerging markets missed that wave. They didn't have the capital to put up the towers. They jumped straight over to the top and they went straight to satellite. And they went instantly, were far more efficient, and we saw an explosion in telecommunications. Payments is going through exactly the same thing. We are jumping over the old rails, we're going to the new world, and then we're going to see an explosion in payments, which will allow fintech, which has struggled to date, to gather new clients, to be able to gather clients. It's going to go 24 hours a day, and the institutions are going to have to catch up. Now, I've been managing money for around 35 years. Most of the funds I manage in this part of the world are Lux funds. It takes 3 days to settle a Lux fund. I'm pretty sure that product's dead. So there's going to be a huge change at the institutional level, private banking, And they are not going to be able to do this by themselves. They're going to need partners. And there's a new mentality. You look at that Citibank pulled out of the region. They don't do payments anymore. Not many global banks do payments. So there is a new spot for new players, like sitting at this table here and around the conference today. I think they're going to change product design, distribution channels, speed, and different access. And before, we had very flighty capital in the region. So when the US dollar was down and there was trouble, it would pull out. I don't think that's going to be the case anymore. I think capital is going to stay here, it's going to be sticky, and you're going to see a lot of accelerated growth within the region.
Hayden, I think you make a lot of great points. And I think if we want to continue on this discussion, we're going to need a lot more time than we have today. But
Sorry, can I just confirm one thing?
Yeah,
Hayden,
absolutely.
You said Hong Kong was the top for IPOs or number 2?
Yeah.
Was it?
Yeah.
Ahead of the US? Wow, well done.
I think you make a lot of great points, and I think that if I have a lot of follow-up questions, but I just can't ask them because we're going to run out of time. But it kind of sounds like the U.S., and I think Neil touched upon this in the very beginning, the U.S. kind of shot itself in the foot, in a sense, right? And sort of now we have what we have, and this region is really kind of, okay, all right, just adapting to the global economic and geopolitical changes, and we're all trying to take advantage of it. I wanted to kind of throw this out, a couple of questions that are all played. You guys can comment. Neil, I wanted to maybe start with you because you did mention AI, tokenization, digital assets. Are they genuinely creating commercial value across this region? And maybe some things might still be overstated in a sense?
Yeah, so I think that, by and large, the majority of the people are actually looking at this type of technology, especially Web3, digital assets, tokenization, and so forth, in of itself as a singular facet of innovation. But from my perspective and a lot of the team actually inside of the Web3 task force, what we say is if blockchain is the body, AI is the brain. So ultimately, these two have to basically merge together in some way, shape, or form. Whether you're talking about payments, lending, wealth, insurance, and so financial products, programmable money, different types of use cases, so on and so forth. So there's some sort of integration between these two. What sort of intrinsic value? And I would say there's a ton of different payment companies that are going out there, whether you talk about Visa's partnerships and so forth, and they're spending billions in terms of acquisitions or partnerships. There must be some sort of intrinsic value in that sort of discussion point, right? And ultimately, I think the same thing that Mario has said is everybody wants it easier, faster, cheaper, better, right? And that's no difference in terms of the payments, and they're bringing it all down. But the question is are you coming in net new as a new player? And there are a number of them that are doing this, building out those partnerships, getting those licenses and all those different things. Or are you actually trying to disintermediate yourself, right? Which is, I think, many of these larger platforms are starting to do and noticing how to do this uptake. So inside of Hong Kong, like I said, we've already introduced a stablecoin license regime. We're going through different applications. I think somewhere around 80 applicants have already come through the door, and a subset will get shortlisted and so forth. So that's almost like the starting point of the building blocks that we need to have inside of the jurisdiction to actually function in that. Now, when you talk about the RWAs or the real world assets, you've seen it inside of tokenized gold, obviously, how we're actually trying to build up a gold hub here outside of London and the US and so forth. I think that's one key area of the commodities trading. I think at the same time, delving into other things like real estate, I think that's also a big play. Being the, whether you call it a green bond or green or blue bond center in terms of all of the different projects, ESG projects that are coming out of China and centering it here and tokenizing those. So I think that there's a lot of different levers to pull inside of it. And ultimately, it will be coming back to this whole AI and blockchain combination, because to really drive that type of efficiency, you can't have a bunch of lawyers or accountants or auditors and so forth sitting around and try to noodle this tokenization. Somehow it has to get automated, and the only way to do that is with AI, smart contracts, and crypto and blockchain. Right?
Great, and to piggyback off of what Neil said, I wanted to ask Mario and Siju, in terms of your businesses and trading, how is AI and digital assets sort of impacting your decision making as you go forward?
I'll share two examples. So obviously you cannot afford to ignore AI anymore, right? But in terms of actual applications, even in our company, three main applications. Number one, using it to solve operational inefficiencies. I think that's the first key thing that everybody, as we run companies, we want to keep costs low. So operational inefficiencies in whatever way, shape, or form, I think that is important. Number two, on the trading side, I think it really helps in terms of predictive analysis. I think where the world has really shifted, a lot of times we are using technology for descriptive analysis, but where AI can come to just mine the data, you can move from really descriptive analysis to prescriptive analysis. And I think that's where it's hugely important. Of course, number three, in terms of how we are employing it for marketing initiatives, right? There are just so many ways that you can do marketing initiatives with AI. So that's one side about AI. I don't think we need to discuss so much about that. I'm sure everybody understands it. But when it comes to blockchain, tokenization, I think Neil has a great point in terms of utilizing it for the seeable future for real-world assets. I think this is important. I'll share two things, right? Number one, real-world assets. I think that is important. If people need a stronger reason to ensure that it's not fluff, I think real-world assets is the one that is really important. In fact, I was reading about this, Neil, about the green bonds thing the HKMA is doing with BIS. They are already thinking at that level, you know. Project Genesis, I think it's called. Over the last few years, they are already testing that. So if they are already doing that at a regulatory, at an institutional level, then obviously us who are a bit further down the food chain, right, in terms of the corporates or the retail, real-world assets, important. Last thing to share, I think stables are. At the end of the day, whether is it about cross-border payments and all of these things, the key is to how do we then do an on-ramp, off-ramp, how do we exchange fiat currency to stables? I think people still want stables at the end of the day, right? So under the digitalization, the tokenization, RWA, stables.
Siju, what about you?
Yeah, Mario captured most of it. I think, you know, the new CEO flex is to say how much of the work is being done by AI, right? So I think Mark Benioff from Salesforce said 50%. So in addition to what Mario said, for us, the real application for AI was, for example, our chatbots, you know, being able to improve our customer service by taking in all the queries that are coming in, formulating better answers. For me directly, I'll give you a personal example. I have one of my staff members who, you know, when he would send me an email and a presentation, I would fire off, you know, a lot of replies. And it used to take about 5 or 10 replies before we got to where we need to. Right. And suddenly within a week, it just got better. And I was like, wow, that's amazing. Thank you for putting it together. And then, you know, he finally told me, he's like, I just kept running all your responses through AI, because the AI was basically telling me, oh, this is what Siju cares about. So I started putting my, you know, summaries together, the executive points with the bullet points, with the questions that you're anticipating. So that made life a lot easier, right? It was very smartly used. So I think it's a huge, you know, it 10x's what your capabilities are. As to digital assets, it's something that we certainly can't ignore, right? You know, as you said, BTC, gold, these are the two biggest things. Obviously, there's a lot of crossover between the crypto world and the CFD world. We offer it as a CFD. You know, there's obviously the crypto providers that are coming into our space. So you're going to see a lot more consolidation in that space.
Awesome. Guys, we are running out of time, but I wanted to fire off one last question. You guys, free to comment. What's the one big opportunity or blind spot that really global players still overlook when they think about APAC in 2025?
Obviously, we all talked about regionalization and specialization of each country. Obviously, that's the blind spot. I think from an APA perspective, you know, across 7 different countries within this region, we're still seeing a lot in fiat currency, and corporates are really, really struggling because the banks are pulling out. And so we're not talking about digital here, but they need on-ramping to the traditional banking sector as we speak today. And they're thinking internally about how they can internalize flow. Beyond that, I think over the next several years, obviously we talked about getting on-chain, the on-ramping, off-ramping, people in the traditional world be well-positioned. The one thing I would say is countries need to embrace other players, not just the banks. We are going to be partners with banks because banks don't want to get in this space, nor can they get in. So I think message to regulators, regulatory players is APAs of the world want to be your partner.
Great. Anybody else?
Prediction markets. You know, I'm based in the US now, so, you know, I think the keynote speaker previously was part of NYSE, which owner is ICE, who made a big investment into Poly with a crazy valuation. Kaoshi's not that far behind. They're doing big raises. So obviously it's much popular today in the Western world. Regulation is still a bit unclear, but I think that will be something that will go global, particularly with an APAC.
For me, it's this one thing that I feel is big about. Guys, build deep, authentic, meaningful relationships throughout the entire ecosystem with your vendors, with your stakeholders. Number one, because it's important, right? Number two, if you ever need another reason, you think about the next 5 to 10 years, the quest is going to be for truth. This one word called truth. We're dealing with AI, it's going to move to generative AI, it's going to move to agentic AI. You will never really know what's going to be true anymore. The quest will be for truth. And the antidote towards that, all right, or against that, is really building deep, meaningful, authentic relationships with the people that you care about, the people that you're doing business with.
I know we're already over time, but
It's okay.
final closing kind of remarks on my side. I think ultimately Asia has always proven its resilience. And if you also think about its level of innovation, particularly out of Greater China, you've seen it, whether you're talking about Ali, you're talking about Tencent, Baidu, so forth. You're seeing that inside of the AI space. You're seeing it inside of the blockchain space. And you're seeing it all across the board, particularly coming into Hong Kong in that sense. Hong Kong has become more of a springboard for international than any other location in the world for a lot of those Chinese companies, including DeepSeek, who set up an office here and also is talking about IPOing here. So at the end of the day, it'll be a hub in terms of internationalization for a lot of these Chinese companies. And ultimately, in that sort of running against championing different types of AI, DeepSeek, and so forth, Hong Kong will play a role in this. So I think that Asia will continue to be resilient, will continue to innovate, and will continue to build different business models inside of the space. Thanks.
Awesome. Well, gentlemen, thank you very much for very important insights. I wish you all luck in all of your individual endeavors, and I wish we had more time because I think there's a lot more that we could discuss. Thank you. Thank you to the panel. Thank you to the audience. And this is day one, so have a great time. 2 days of connecting, collaborating, partnerships, and things like that. Enjoy. Thank you.
Thank you.